What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So if you recall, last Sunday, I told you to expect more sideways trading action. The reason being that the market always drops lower before all of Jay Powell's addresses. Then they rally post-testimony before cooling off as investors and traders alike make sense of what was shared. You can look at any major index chart and they all virtually share the same pattern. Last week was full of economic data that I'm not going to bore you with, but the bottom line is this. There's always a healthy dose of fear injected into markets before any Fed address, which by the way was Tuesday the 11th. That creates a buzz and generates views for the financial media. Then asset managers trim more than needed, so they have dry powder ready to redeploy. Since most prep for the worst possible case scenario, it essentially ends up being a sigh of relief because we avoided the worst, and market push higher. Asset managers and traders alike take profit and then we level off. If you're a small retail investor like me, your options are basically to try and play the same game, but you're more than likely get burned even if you understand the general pattern, or you can recognize this for what it is, which is short-term noise. And if you do, the question then becomes, should I use the opportunity to buy? And if so, what should I buy? This brings us then to today's topic. And so in today's video, I'll tell you why Virgin Galactic dropped to its lowest level in over a year. I'll share my thoughts on what this means for the future of Virgin Galactic and wrap up with what I'm personally doing about it. As always, I'd recommend watching all the way through so you don't miss out on any pertinent information and the thought process behind it. Drop the video an early like if you haven't already and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. So then, if you take a look at the Virgin Galactic chart this past week, you can see the initial drop on Monday that is in sync with the broader market leading into the Fed's address on Tuesday. That is usually a great time to buy anything that you like at a nice discount. I personally took the opportunity and bought an additional 100 shares. The stock bounced as expected with the rest of the market, and it was a nice win. But then Thursday rolled around, and you can see this massive drop here. The reason, Virgin Galactic issued $425 million worth of senior note bonds to raise capital. Those senior notes will mature in 2027. Take a quick listen.
Take a look at Virgin Galactic. Shares of space. Oh boy, what goes up must come down. And this one is coming back to earth in a big way. It is off 18% today. It is down, just so you know, the stock is off something like 75, 76% over the last 6 months. Why is it falling to earth today, you may ask? Well, I will tell you. They're going to offer up to about $500 million in a new debt offering, and company trying to raise money so that they can go forward and advance, quote, the development of their spacecraft fleet for high volume commercial service. Emily?
Well, I'd say it's pretty obvious how he feels about it. The market's initial reaction was also in line with what is reasonably expected. Investors and traders alike hear a company is raising capital and the stock sells off. You can count on that 9 times out of 10, and the main reason being that most folks just don't want their shares diluted. But here's why I believe that it's not as bad as what the market reaction suggests. And I get it, right? Selling is always the easiest route. And to be fair, the stock has fallen so low that no one who bought the stock on the open market is still in the green. Well, unless you were one of the few lucky folks who bought between November 1st, 2019 and the week of December 13th, 2019. And that's assuming that they're still holding. I'm personally down 50% on my position, so why aren't I in panic mode? It's pretty simple actually. If you take a step back, you'll realize that of all the ways that Virgin Galactic could have raised capital, this is by far one of the better ways to do so. So let me explain. First off, this is a bond offering instead of a at-the-market common stock offering, meaning that they are not diluting your existing shares. Also, the deal stipulates that this was done via qualified institutional investors and with a 2.5% interest rate that it will accrue over time. But more importantly, it is the price that the senior notes were priced at, and they were issued at $12.79, which represents about a 27.5% premium over the closing price last Friday. The other important aspect of this deal is that those investors cannot redeem their bonds until 2027. However, Virgin Galactic can pay it back early with a combination of cash and or stocks. And so if you think about it, the willingness to pay a premium and be locked in for 5 years on this deal tells me two important things. Number one, those investors are confident in Virgin Galactic's ability to repay their debt. And number two, they view Virgin Galactic as a viable business today, not just something that is still in prototype or conceptual phase. Last but certainly not least is how the cash raise will actually be used. $52.3 million of it will go towards capped option calls. And I'll spare you all the legalese and the intricacies of the deal, but it's basically cash dedicated to help minimize investor stock dilution over time. The rest will be used to fund, and I quote, working capital, general and administrative matters, and capital expenditures to accelerate the development of its spacecraft fleet in order to facilitate high-volume commercial services, end of quote. And for anyone who forgot, Virgin Galactic is targeting to commence commercial flight in Q4 this year, and this will go to help support that endeavor. Now, the other variable to factor in is how analysts are viewing this, and at the close of the trading week, analysts covering the stock have adjusted their ratings and price targets to account for this latest news. The current consensus places the median price at $24, and that suggests a 136% upside from current levels. The lowest expected price is $15 in the next 12 months, and $44 on the high end. And so with 3 buy ratings, 2 hold, and 2 sells, this tells me that the market overall is still bullish on the company's potential. That said, it needs some of the uncertainty from the macro backdrop, so think Fed rates and Omicron, for example, and Virgin Galactic's own ability to stick to the current schedule to dissipate. As far as my own plans moving forward, with my last 100 shares that I purchased this week, I've officially reached my initial 1,000 share count target. Now, granted, my average per share price is a bit higher than I would like, given how low the price has fallen, so the name of the game at this point for me will be to bring my average down. I could do this a couple of ways. Option 1 could be to sell a portion or my entire position, book the loss, and buy back at the current lower price. This would offer a nice tax benefit. Downside here would be that I truly lost $10,000. Option number 2 would be to increase my overall share count, the main benefit being that my average would drop, and I can trim later on to reallocate those gains. The downside, however, would be that I need more capital invested into Virgin Galactic that will sit fairly idle for the next few months. Decisions. What will I do? Well, I liked the stock when it was above $50, so clearly I love it even more now that it is at a dip discount. I do have other positions that I need to prioritize, but frankly, option 2 makes the most sense to me at this point. But we'll see how the macro backdrop evolves through the rest of Q1, but that's more than likely the route that I will go and increase that position over time. Ultimately, here's what I want to leave you with. At the end of Q3 2021, Virgin Galactic was sitting on nearly $1 billion in cash or cash equivalents. Their cash burn rate should now be in the range of $85 to $95 million per month to help support the ramp to commercial flight. With the extra $400 million, call it, that they've now essentially added to their balance sheet, this adds another 4 months of operational capital onto their balance sheet, even if no revenue comes in at all. So from my perspective, this was a great strategic move and executed in a way that minimizes the impact to investor value. And so am I pumped about being down 50% of my position? No, I'm not. But am I confident that I can offset this and more than make up for the short-term pain long-term? Absolutely. Now, obviously, I'm not a financial advisor, so you'll have to consider your own time horizon as you decide what to do next. With that said, I'll leave it here for today. The earning call for Virgin Galactic is expected next month with the exact date to be announced. I'll share it on my Twitter account as soon as it's available, so be sure to follow me there as well. The US stock market is closed on Monday, but I would expect the macro backdrop to start slowly improving starting next week as more positive earnings results to drop. If you enjoyed today's content and found it insightful, be sure to smash the like button if you haven't already and share it with others. For my newcomers, remember to hit the subscribe button and ring the notification bell so that you don't miss out on any future content. As a reminder, I post every Sunday and as time allows in week for more crypto-focused content. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.